Let's talk to Tim Harrison. He's the head of wealth management at Linear Investments. Very good morning to you, Tim.
Morning.
Right, off air, you said it's a M&A Monday morning, mergers and acquisitions. What's going on?
Well, it seems to be the phrase for the last 6 to 12 months, I suppose. Every Monday I come on here and every Monday I say Merger Monday. This morning you've seen the news that RWE, E.ON and Energy have all got out of bed with each other. So there's been a bit of appetite for those three companies this morning in the marketplace. Furthermore, some of the peripheral companies are also catching a bit of interest as speculators are obviously looking at who's going to be next. Furthermore, this morning you've seen a raised offer for GKN come in from Melrose. It's hardly unexpected, but again, a rather tapered reaction from the marketplace because again, it still allegedly undervalues GKN's real value as to what the board suggests. So it's a case of there's a lot going on. Obviously, the jobless figures in the US on Friday have helped the market along. It was a massive figure in terms of the actuality of the number that came out, but more importantly, reading through the numbers on Friday, it was a case of the jobs being created are on the lower end of the pay spectrum, and therefore lack of inflationary pressure. So the market's obviously jumped forward 400 points as a result. It's seemingly, we shall see what this week brings, but there's a few economic data points to look out for which could increase volatility somewhat.
Quite a few weeks we've been talking about political uncertainty, okay, and the risk premium in there, okay. Obviously, the headlines with North Korea, for example, have got to be fantastic for the market, haven't they?
Well, it's a case of what can be put forward can be taken away just as quickly, I'm sure. If you look at North Korea opening their doors, so to speak, and suggesting that they are looking to become everyone's friend and ally, that's all well and good. But again, I'd be cautious of the fact of what are they trying to get out of it. I think more interestingly on the political landscape is what's happened in China over the weekend with regards to the leader of China being allowed to stay past his 2 terms. Therefore, it's a case of can he maintain his position for the longevity and really get China back into the next economic up phase, which many are predicting we're on the cusp of. Again, that's probably more exciting for the markets, in my opinion, than Kim Jong-un being unleashed to the masses.
And finally, any UK companies reporting this week you've got a particular interest in?
Well, we've got, I suppose there's a couple of companies to look out for. Adidas on the German exchange report this week, but close to home, I suggest one to look out for, maybe Dignity, the funeral company.
Because they had a profit warning.
They've had a massive profit warning, write down of their shares down 50% on the back of that. But again, with their shares now where they are, it may be a trader's sort of play, if you like, because the shares are 50% cheaper than they were. The price comparison websites that are out there that is now common knowledge. So any uptick in or slight, I've got to be careful what I say, bullish update from a funeral provider, it could be gobbled up by investors.
Well, on a personal note, let's just hope we don't have to use Dignity anytime soon. Tim, as always, thank you for your time.